Hey, this is David with Anvil Tax. Are you happy with the amount of taxes that you paid last year? How about last quarter? June 17th, which is coming up soon, is the second quarter estimated tax payment deadline. Are you prepared? Are you excited about cutting that check to the IRS and the state and the city and the county and all the taxing agencies? Or do you think that you could pay less in tax? Do you think that there might be strategies, deductions, exemptions, things that maybe you haven't looked at? Do you think that there might be hidden tax deductions, savings, credits, exemptions, those types of things your accountant hasn't told you about? Maybe they don't know. Maybe they're not planning. Maybe they don't have the checklist going through every line item and making sure that you're not overpaying your taxes. I want to invite you to meet with me, David at Anvil Tax, to make sure that we're planning for now, for retirement and upon death. And that we want to make sure that you have your liability protected because we want to make sure that you're covered. Because I believe that clients want three primary things. They have three primary goals and objectives. One is to build wealth. Two is to protect wealth. And three is to preserve wealth. So we got number one, build wealth. Number two, protect. And number three, control. Everybody wants control. Control is king, right? We want to control. And so typically when we want to build wealth, we want to consolidate. When we want to protect wealth, we want to diversify. And then when we want to control the wealth, we want to provide strategic planning, asset allocation, and want to make sure that you're going to control it for the long haul and that it's not going to just be washed away. At Anvil Tax, we have a 4-pillar system. The first pillar is data driven. We got to have good data to back up the gut instinct. We believe that the gut makes good decisions based upon good data, but often bad data is fed into the gut and we make bad decisions. How do we do that? From our accounting system, forecasting, figuring out what should be focused upon, having a dashboard. Let's stay under 20%. Use the Pareto principle to get 80% results by doing 20% of the work right. So let's think smart, beat the gut, and get a whole lot of stuff done. So the second thing is asset protection. We got to protect yourself, protect the hard work that we've done, making sure that the LLCs are set up correctly, making sure that we're stress testing. So the big bad wolf is going to huff and puff and blow the house down. We want to make sure that we've stress tested this thing and that it's not too late. And so when that litigating attorney, IRS, the due diligence, whatever it's going to be, that we've got everything documented. It's in order. We've got these standard operating procedures set up. We've got things documented. We've outlined, we've organized, we've set up these systems so that we're capturing all the data, that we're keeping it, our contracts and agreements, and we're controlling the controllables, and then we let go of the rest. So the second thing, like I said, is asset protection. So protecting our, what? The third thing is tax mitigation. Let's legally, ethically, morally reduce our taxes to the bare minimum so that we're not overpaying our taxes now in retirement upon death. A lot of people are kicking that tax can down the road and it's going to hurt them. It's going to go boom, blow up in their face in retirement because they're just taking a deduction now, and then it's compounding interest. And the rule of 72, it's doubling and doubling and doubling. And then boom, we're going to hit a big tax hit because that little retirement account's gotten bigger and bigger. And then we saved money on the seed, but on the harvest is where the tax person comes in. And of course, the government wants you to kick that can down the road because of Rule 72. Listen, when you can save 30% on $300,000, but that's going to grow and compound and double as you're going to get a good rate of return. Now it's going to be $3 million. Say if you're in still the 30% tax bracket, what would the government want? You to pay tax on the $300,000 or the $3 million? Of course they're going to want you to pay tax on the $3 million. That just makes sense. Why do we do that? Why do we trade that? That seems like a bad deal. But that's how it's set up. The fourth is legacy planning, succession planning, and leaving the legacy that you want to leave, not running out of money. So many people are retiring in poverty. They're retiring into poverty, and it's sad. Majority of Americans are retiring into poverty and they don't have enough, and they're relying upon Social Security and they're relying upon Medicare, and it's just not going to pay the bills. The government has been spending so much money over the last 4 years with COVID. It was close to what, $11 trillion, right? I read a study. It was President Washington to Obama. They spent accumulated debt of 11 trillion, but in the last 4 years, spent 11 trillion. This huge amount of money. People who are being born into our society today coming out of the womb with $133,000 of debt as a baby, national debt. It's a problem. So, do you think they're going to raise taxes? Yeah. Why? Because the interest on this tax, that the debt that's owed, is so much. So, Congress is going to be looking for money, raising taxes. It's going to happen. The June 17th is just right around the corner. We need to make some adjustments. We've got to come up with some ideas to lower your taxes, because the taxes are coming. It's that tsunami coming down, and we can see it. The storm is coming. And so let's do things now. And a lot of people, their income is down because of high interest rates and they're getting laid off and stuff. But guess what? They still got to pay tax. And so this is the time to start a business, start a side hustle, do some tax planning now, later, and upon death, because taxes are the biggest expense that we have over our lifetime. And the biggest asset we typically have, it's our estate. Within our estate, it's our retirement account or a business. And again, it's like, why are we spending so much tax down the road and kicking that tax bomb down the road? Let's figure out a better way to save taxes now in retirement and upon death. There is a better way. There's a better way to plan, a better way to strategize. And majority of business owners, their value, their retirement is locked up into their business. The Exit Planning Institute, EPI, does studies all the time, and they talk and they ask entrepreneurs, people who are businesses, they talk about, where is their money at? The majority of people tie up their money, 80% of their asset in their retirement is in their business. What is a business going to sell? What if that person dies? What do they have to leave that legacy? So let's make sure that we're planning and building value. And why do we have this concept that, well, I'm going to sell my business and it's going to be once and done? Why not have multiple bites of the apple? And we're going to sell the business over and over again. Yeah, we're going to give up equity. We're going to give up control. But if we can increase the value by making it bigger and having a larger multiplier and selling it, look at the wealthiest people in the world. They don't own 100% of their businesses. Jeff Bezos, Elon Musk, all these people, they don't own 100% of their business anymore. They sold it. And that's how they become wealthy, by building their businesses, building up their retirements, building up assets, and using a Main Street approach is going to be helpful, having more control. And I think people want more control. And so this June 15th, we're out of control. We got to write these big checks. I want to help you come up with ideas to lower your taxes so you're not having to pay so much. I know I probably just said June 15th. But that's usually when it is, but it's probably falls on a Saturday, then it's the next Monday, all that stuff, so that the date is messed up. So got to keep track of it. Main concerns. Here's some highlights and main common issues that people are missing. They don't have a checklist. People don't have a checklist. They're just winging it. And most CPAs and accountants, they're tax preparers, not tax planners. I'm a tax planner. I've gotten certified by Mark Kohler, the Main Street certified tax advisor, certified tax coach, certified. I've gotten so many certifications. I'm a former IRS auditor that I understand tax planning. But again, it's not always tax planning now. We don't want to sacrifice all the save now to kick that down the road. We want to plan it out and think about when is the best time to pay that tax, now versus later, mixing it up. So one of the main concerns is not taking advantage, not having this checklist of all the stuff that you can do and what are the 57 things that we can do and just make sure that we're getting all those things checked off for those 4 pillars: the data driven, the asset protection, the tax mitigation, and the succession planning. Building all that in and making sure that we have that checklist and just double checking because that's so important. But some of the big things is like missing deductions of hire kids, missing the home office. I talked to so many people about home office and they're scared of taking a home office. Why? If we document it, if we deduct it the right way, there's nothing to be scared about. Yeah, you know what? There's a lot of things that are like on the IRS radar that are listed transactions and listed stuff. I'm not saying home offices, but there's other things that are strategies that we can take. But if we're doing things right and we expect to get audited, no big deal. Why? Because if you look at like publicly traded companies, right, they get audited. There's so much oversight. And I think what happens in privately held companies is that there's not the oversight. The oversight's not typically there. And so there's all these issues. And so when they go to sell, or there's a loan that a bank, due diligence, or the big bad wolf litigating attorney or whatever comes and huffs and puffs and tries to blow that house down, that they haven't tested. If you're tested, you don't have anything to worry about because you've got the documents, you've got the systems and the standard operating procedures, SOPs, and you've got everything organized. And every time that you go spend money at Costco or take a trip, whatever, you're on your phone, you're just like, snap it and just upload it to QuickBooks or Xero or whatever the system so you can verify it. We need to have receipts. I think the number one thing that is missed out in audits, you talk to auditors and you ask them, what's the one thing? And I think the one thing that they wish that everybody would know is that there is no line item on the tax return for a business. I'm talking about business or rental. There's no item that says January, February, March, April. They're bookkeeping. A lot of people keep a manual system and they keep their receipts by January through December. Nuh-uh. Keep the receipts by category. And I've got a program that's coming out soon that will help to organize receipts and help to organize expenses. And again, I use QuickBooks and Xero and all these other programs to help that. There's logic and there's a methodology to the madness. There's this learning management system that I'm building to help with the logic behind it, to know where to categorize, know why, who, what, when, where, and to have that mindset of what the IRS is thinking about. What, why, how, who, when, where. So if we understand what they're thinking about and why they're thinking about it, then it's like playing chess. We know the moves. We know what the opponent's going to be doing. So we understand the playing field. And so I'm not asking you to get all technical and get into the regs and court cases, but just have a basic understanding. It's like driving a car. You don't need to know the compressions and the piston, all that stuff. You just got to know the brake and the gas and the on and off and the parking brake and all that other stuff, blinkers and whatever. You got to know how to drive the vehicle. So many people just don't know the basics of the financial statement. They don't know that the financial statements, the chart of accounts, and how it works, and just some of the basic stuff, and how the financial statement. That's why I went into accounting. I went into accounting because I recognized that accounting is the language of business. If I wanted to be a successful entrepreneur, because I recognize the wealthiest people are entrepreneurs, typically, unless you're in entertainment or celebrity somehow, but a majority of people have made their money out of business and selling something. Even entertainers, they're in business for themselves to make money, obviously. So entertainment, that's different than obviously having a business and growing the business, but having the basic business acumen, having the basic business understanding is going to take you so far. The June 17th deadline's coming up soon. So don't write another big check that you don't have to. Let's go through the checklist. Let's see the things that are missing and fill that gap. Because right here is where most people are paying. But right here is what they should be paying. And there's that gap. And what could they do with that extra money? Where could they invest it back in their families, into their lives, into their businesses, invest into their future, into themselves? Maybe not work so hard. Maybe not have a heart attack. How many people die at their desk because of stress, right? Because they're workaholics. And so maybe, and they don't have enough plan. They don't have enough for retirement. A lot of people are afraid and they can't afford to retire because they don't have the money coming in. Why? Because they haven't figured out how to sell their business multiple times. They haven't figured out how to ratchet it up and to build that value out of their business and be able to exit through stages. And it's not just a once and done, but it's a staggered event, and pay less in tax and to continue to become more of an investor, kind of like the Robert Kiyosaki 4 quadrants. The W-2 employee, that W-2 employee gets a job. They no longer have a job. They own a job. They're self-employed. And they go up to that upper right quadrant. They become a business owner. They start having employees and people to do this stuff. And last quadrant, the investor. Moving from being the self-employed, got to do everything, to more of the conductor and making sure that the business is running the right way. So there's so many things. And one of my passions is hiring my kids. I got teenage kids. I hire the kids. They can do video editing, man. They're doing video editing for me. They're doing all this stuff to help me in the business. Should be paying for them. Put that money into a Roth IRA account. Sock it away for college. Put it in 529s or Coverdales. Do all this stuff for retirement accounts and investing into the future. Pay the kids. They can buy their own Nintendo Switches and all that stuff, the game stuff. We're still providing. We're helping them to grow. The accountable plans, having a business and making sure the reimbursement. A lot of people miss the accountable plan. Why? I don't know, because nobody's talking about it. I want to be talking about it. And it's like paying people the right way and not like doing stuff under the table, because there's enough deductions. There's enough ways to legally, ethically, morally write stuff off and not have to play these games. Because IRS, they'll look at what are you spending your money on? And they'll look at your insurance policies. They'll look at bank accounts. They'll look at cash transactions, and they'll bump it up. And they'll say, it doesn't make sense, sir, how you make so little money, but you have such a big lifestyle. There's a big gap here. People go to jail for that, and it's sad. There's no need for that. And so we can do things the right way. Do it legal, ethical, moral. Take advantage of the loopholes and to sleep good at night and to make sure that I'm contributing my fair share, but not anymore. So the call to action is, let's have a conversation. Let's talk. Let's make sure that we're going through this checklist. And it takes time, but we got to have good numbers. We got to feed the gut. We've got to do the things that we got to do to get the job done, because otherwise we're just going to let the money go flowing out the door and it's a waste. It doesn't need to happen that way. So let's take our money back. Let's take responsibility for what we have and just not, good golly, I hear it all the time. People, attorneys, accountants, CPAs, whatever, they'll tell clients, oh, don't worry about it. Don't worry about it. I got to figure it out. Next thing you know, things aren't being filed and they're missing payments. They're missing this. They're missing that, missing deductions. And then they get this big bill and penalties. And it's like, no, if you ever hear somebody say, don't worry about it, I got to cover it. It's like, why? Check that out. Make sure that it's being done, because you're signing that dotted line. And yeah, that preparer's got some accountability and stuff, but it's ultimately you. And it's going to be you on the line. So you make sure that you understand, because you got to be a good business owner. There's a story about that I remember, Arnold Schwarzenegger. He got ripped off when he was a new actor and he didn't read the contract. And so after that period, he read everything and he knows everything because he got ripped off. He's like, never again. So read through, know what you're signing, know what you're getting into, document, create systems and procedures and automate and to make your life easier and not get ripped off. So creating these systems, doing it right, being systematic in your approach with data-driven and tax mitigation, asset protection, and succession planning, and leaving a legacy. Using the money and the time and the resources to bless other people. That's the most fulfilling thing, is to give and to love and to give back and to receive. It's that symbiotic relationship to give. So let's do good in this world. Let's bless other people and do good and receive those blessings and to give blessings and just have fun doing it. We can do this. So the June 17th deadline's coming up fast. Don't let that fly by. This is important. Let's take this opportunity and to really make the most out of it. Let's do this together. You need a team. I want to be a part of that team. And if I'm not a part of that team, find somebody who's fired up, who gets this, who's not just, oh, I'm just going to do some bookkeeping and accounting. No, you want somebody that's on the edge of their seat, that is fired up, that is taking proactive measures, that is really looking out for your best interest, because it's all about the bottom line here. The top line, bottom line, everything between. It's accountability and doing right and doing it right the first time. One of my favorite sayings is, if you want to double your time, if you want to increase your productivity, stop doing things twice or 3 times or 4 times. Figure out how to do it once and do it, document it, slow down. It's that we'll sharpen the saw, Stephen Covey stuff. You get further along by slowing down and sharpen the saw than you do and just ripping through it and trying to cut with a dull blade. Figure out this plan. Start with the plan. It's also like building a house. If you want to build a little chicken coop, you don't need a plan. You just start getting the wood and nailing and sawing and doing all that stuff. But if you want to build a 5-story house or a bigger house, maybe you want a swimming pool, maybe you want a hot tub, maybe you want a helicopter pad. I don't know how big a house you want, but you got to have a plan. And you got to lay things out. And that's the same thing with finances in life. It starts with a plan. And a lot of people are like, I'm just going to wing it. I'll just see what happens. Throw the dice. Some people do get lucky. That's great. That's great. Yet majority of people don't get lucky. And that's why majority of people are retiring into poverty. And it's sad, and it doesn't have to be that way. We don't have to throw the dice and see what happens. We can plan, make it the best. And so let's think about it, because taxes are the biggest expense that we have over our lifetime, typically. Our estate, our retirement account, and our businesses are the biggest asset within the estate. So let's do what we can. So I want to be a part of the team, help you out. Takes a lot of people. Takes a lot of people on the same page. And it's sad because there's a lot of advisors out there, financial advisors and insurance people and attorneys and accountants and all these people circling around. They got products that they're trying to sell and ideas, and they're not on the same page. And people are like, I'm so confused. This guy's got this thing and this person's saying this thing. And a lot of them have their own self-interest in mind. And that's sad, because your advisors need to be on your page, on the same page. And they need to be working towards you, or for your good. They need to be working to help you to accomplish your goals. But a lot of people are like, I don't have any goals. I don't know what to do. I'm lost. I'm just do see what happens. Instead of figuring out, what don't I want? 80% of success is figuring out what you don't want, and that 20% is figuring out, is knowing what you do and being laser focused. I remember learning from a basketball coach. They were talking about the greatest distance in the world is the distance between knowing and doing. The shortest distance in the world is clarity. So I hear it all the time. I got 3 teenage kids. Oh, Dad, I know. Well, do it. And then they start saying, I do, but they're not doing it. The socks and the shoes are still on the floor. Doing and knowing are 2 different things. Clarity is key. Let's figure out what exactly you want and what you don't want, and start working towards what you do want, and put on those horse blinders and just focus. Focus upon what you do want and eliminate those distractions, what you don't, and stay the course. And obviously it's going to change, but it's like hopping in the airplane, because here to Hawaii, you got to have a destination. If you don't have the right coordinates, those OKRs and KPIs and all these acronyms to hit that target, otherwise you're going to be lost out in the ocean somewhere. Got to have that target and work backwards. So let's work on that, figure that out, and come up with a plan. Yeah, it's going to take time. It's going to be hard work. And so many people are like, oh, it's easy. Just take this pill. Don't worry about it. You don't have to do a thing. No, it's hard. But the hard work pays off. It's going to pay off. It's going to be the best. So let's work on this together, come up with a plan, and execute that plan efficiently and effectively to accomplish your goals. And do this and make 2024 the best year ever. Because we know taxes have to increase. They have to. And we're going to see more and more taxes coming. So we need more and more tax planning, proactive tax planning. Again, I just see so much bad advice out there. So we got to shut that down and have good advice. Make sure you're documenting everything and just continue to live in that love and abundance. All right. Until next time, I appreciate you. Take care.